Good morning, everybody, and welcome to FX Street. This is Mark Whistler to discuss trend lines and charting functions, and we're also going to discuss the broader market as a whole. Hi, Boyke, and I just want to check and make sure everybody can hear me okay, and that we're not scratchy or too soft or too loud. Great. That was a little stressful, but I'm glad we got it all taken care of. Okay, I just want to go over really quick. Last week we discussed the macro to micro picture and macro to micro trend analysis, and really kind of discussed being able to understand and look at the larger picture to really have a good idea of what's happening on an intraday level. And in doing so, what we really hope to achieve is in moments of confusion when we find ourselves in a trade and we're drilling down into the intraday charts and a position starts to move against us, if we understand exactly what's happening within the larger trend within Forex and within a specific currency pair that we're trading, we really kind of stand a chance of avoiding the analysis paralysis and larger confusion that comes with not being on the right side of the trend. If anybody here, and actually just out of curiosity, has anybody here ever been in a trade, you know, on a 5 or 10 minute chart, and the trade starts to move against you, and you back up and you start to look at other charts, and then you wonder whether you're even on the right side of the trend at all? And I'm sure. Yeah. Okay. Great. Great. Yeah, I thought I'd check and see. Okay, well, what we're going to do here is I'm going to kind of go over some of the stuff that we covered last week, but I'm going to move through it pretty quickly because we ran out of time last week, and I really would like to get down to the intraday charts because that's really where the meat of being able to find the actual position entries and exits are. So I'm going to start right here with the Euro-US dollar on the monthly chart. And as you can see, the indicators that I have here are simply a Bollinger Band and stochastics. And last week the question was posed whether these are the only indicators that I use, and that's not the case at all. I actually use quite a wide variety of indicators, and including you know, the fundamental foundation behind all of my trading is really economic and fundamental analysis. However, the charts really within Forex present us with the specific trading opportunities, and without a very in-depth understanding of technical analysis, all of the fundamental analysis in the world won't work as well because we have to be able to see visually where we're going to enter and exit trades. So that's kind of how I really look at Forex is the economic situation is the fundamental building block, and then the technical analysis situation is the actual trading stimulus and trigger behind our trades. So I'm just going to add 2 moving averages here really quick, and I'm not sure if I discussed the 200 and 50 period moving averages last week, but the 50 and 200 period moving averages are great benchmark moving averages to include on every chart regardless of the period. And as you'll see in just a few moments, just on a self-fulfilling prophecy level, when we use these 2 moving averages, there we go, let me get them up there. Okay, and I just want to check, can everybody see the chart okay? No issues with seeing the chart? And by the way, if you have any questions at any time, I really hope that that to make this webinar as interactive as possible. And if you have any questions, please just ask them, and I'm more than happy to pause and stop, and we can go over anything and everything you'd like to. So I'm just going to discuss some simple trend line analysis right here on the monthly chart, just because it's really important that we all have a very clear idea of what's happening within the macro picture. We're specifically just going to cover the Euro-US dollar today, and then moving forward in future weeks I can talk about other currency pairs as well. To begin, the Euro-US dollar, we know fundamentally we're beginning to see the very first stages of a paradigm shift, in the sense that a stronger dollar is becoming a globally accepted concept, in the sense that that obviously if the dollar begins to rally, the price of oil should start to cool, and we're also starting to see some recovery within the U.S. economy as well. In Europe itself, GDP growth is slowing, and inflation is obviously a huge issue as well. In the French CPI report the other night, we actually saw inflation at 3.7%, which is month over month an increase of 0.4%, and the ECB overall, their target inflation rate is 2%. So we kind of have a little bit of two items butting heads here. We have U.S. Inflation itself, economic recovery, and then also the potential of decreasing oil through higher U.S. dollar. And that is butting head with the inflation policy of the ECB. However, over the long haul, the U.S. dollar should win, and we should begin to see the U.S. dollar recover in the months to come. Okay, so that's the fundamentals behind the macro trend. We can actually see that on the chart, and I'm just going to draw a couple quick lines here. If we just simply do, and I really would like everybody here to get in the habit of really drawing as many trend lines on your charts as possible, because this is one of the most effective ways of really understanding broader market psychology. And you can see right here, I've drawn a trend line from January of 06 through January of 08. We know that this is ascending support of the 2-year relevant trend. However, if we can draw another trend line starting from about mid-January 07 to January 08, and we know that this is the short-term relevant trend line within the monthly chart. I'm just going to back up the chart just a little bit here, and this is pretty incredible. If I draw another trend line all the way back to 2002, you're going to see that we really have a very, very distinct ascending trend over the last 6 years, and we've almost have 3 stages of this trend line: 1, 2, and 3. We've got the long-term trend line, the mid-term trend line, and then the short-term trend line. And this is, of course, is on the monthly chart. There is another trend line in here, but we're not going to get that until the actual weekly chart. Jack, I'm not sure if I understand your question. This is a mega trend line, maybe too big to trade. Well, no, actually, it's not too big to trade. What we're doing is we're really drilling down. We want to understand what the macro picture is, because we want to know what's happening on a short-term basis. And the other side of that is, because we know where these 3 trend lines are now, one of the most incredible things here is that if we're able to time our short entries looking for this larger paradigm reversal, then the chances on us actually having a significant time hold with a position that's going to have a huge return over the long haul increases substantially. And ideally, what we would like to do is we would like to be able to time a short entry position and see it fall all the way down into ascending support here. You know, the possibility of this type of reversal within the next year or so is definitely a reality. So on a short-term basis, we can also trade within the short-term trends here, which is, I think, what everybody here is probably more interested in doing, and finding day and swing trades. However, if we keep the long-term trend in mind, that short-term swing trade that we implement could turn it into a long-term position trade. And I have a feeling just about everybody here would probably be pretty happy with a 1,400 pip winner. And that, you know, that's a good possibility, but we can never achieve those huge 4-digit pip winners if we don't have an idea of where the long-term trend is. Okay, so I just want to show really quick also, if we just use standard pitchforks, and I'm going to try and really move pretty quickly through these charts, so I apologize that I'm moving a little slow here. If we just do a simple pitchfork analysis here, and you can see I'm going to start right here on the lowest point of the range present or prior to the actual trough from 2005, and this will give us the pitchfork that we're looking for. And you can see what's amazing about pitchforks is they really are. Trader One, I do consider Elliott waves very, very much so. The only issue, though, is that Elliott waves, especially within the longer-term trends, don't always show up with the third wave. So, but I'll discuss that. I can actually do a specific seminar covering these same charts next week on Elliott waves or the week after, and we can go over exactly where the waves are and how you can spot them in the future. However, I think that would take too much time from today's session, so if you don't mind, I'll just stick to Pitchforks, trend lines, and the indicators that we're discussing. But I will actually point out some Elliott wave stuff as we see it. Okay, so we see the pitchfork. When we dissect the trough here, what's really important for traders to understand is that pitchforks aren't simply just a trend analysis tool. They're actually a mean identification tool and also a tool that helps us locate implied volatility. So what we've got here is we've got our midline of the pitchfork, and you can see I've just dissected on a visual basis. We're probably a couple pips off from the actual midpoint, but I've just dissected the trough from 2005. Well, amazingly, the recent capitulatory move that we've recently seen in the Euro-US dollar has struck that mid-pitchfork exactly and slightly just traded above it, and you can see that we're actually underneath it right now. Then, if I were to draw another pitchfork, which would be the lower pitchfork, the trend analysis tool, you can see that we also have ascending support just below ascending support from our midterm trend range. So, of course, we do have the upper pitchfork there, but I think at this point it's unlikely that we will hit it. So basically, from the monthly chart, what we can infer here, and we also have further confirmation from stochastics and the upper Bollinger Band. As you can see, for the first time in a long time, we've actually just come off of the Bollinger Band. Once you see a significant rally into a Bollinger Band where the Bollinger Band is pierced and then we start to close off of it, the event infers that on a statistical level we've capitulated at 2 standard deviations, and if you've pierced it, even more so, potentially going up to 3, and that we will likely see a reversal back into the moving average. And this is a 20-period moving average on the monthly chart. So you can see that the 20-period moving average also lines up with our midterm trend, and then also the lower pitchfork. So you can see that we have significant ascending support on a long-term basis in the Euro-US dollar. If we were to actually just mark that and assume we were going to fall down into this area, we would have significant support right in the 1.4663 area, though more likely we would probably strike this level right around 1.5500, as it will take us a little time to get down there. Okay, so now we all have a good idea of what's happening within the macro trend. We also know everything that I'm kind of talking about as far as the potential reversal here. We know what these key pivot points for the reversal are. However, we have to keep an eye on the short-term trend here that goes back 1 year. And if we are not able to breach this trend line that you see, and actually I'll just zero in on that. If we are not able to breach this trend line as we start to fall back into the 1.5273 area, and assuming, if we were to completely sell off this month and on this monthly bar test this trend line, you can see that it would also test the low of the gap up of the 4 months ago. So, but if we are not able to breach this trend line, we can assume that potentially we might start to see the Euro-US dollar walk back up. Personally, I think that we're really on the eve of a larger reversal. I don't want to dissuade you with my my currency opinions, but I think that sooner than later this trend line will be breached. Okay, now I'm going to drill down into the weekly chart. Are there any questions? And I just want to make sure everybody can hear me okay. Anything that I'm covering, anything that I'm not covering that you would like to hear? Okay, I guess we're all in good shape. And by the way, I just want to thank everybody for their time today, and I hope everybody's doing great this morning. Okay, so now we look at the weekly chart, and you bet I will get down to the shorter term time frames here pretty quickly. So just on the weekly chart, by drawing this trend line as you can see, we have ascending support dating back to the summer of 2007. And you can see that we're actually resting right. We've come off the top Bollinger Band on the weekly chart, and we're resting right on support of the 20-period moving average with ascending support just below at 5195. Of course, we do have whole number support as well, and then we have the 50-period moving average and the lower band of the Bollinger Band. And I'm sure that maybe in some analysis by larger houses. No, Bob, this is not my usual framework for a trade. But what you have to understand is that there really aren't a lot of indicators. I mean, really, we're just kind of eyeballing stochastics. We're eyeballing Bollinger Bands, and the reason why we're doing that is they're just very clear, simple indicators of momentum. We're not using them for actual trade triggers at this point. We're just using them just to kind of get a good idea of what's happening within the bigger picture. And really, what I'm trying to do here on the longer-term charts, I just want to understand exactly where the euro-US dollar might stall if it begins to fall. So I'm just looking for these key levels of support, and you can see I've got 1, 2, and we can consider this will be 2 as we get there, and then 3. And really what I want to know is that if at any point in time I'm short the euro on an intraday basis and we start to stall and reverse on a longer-term basis, I want to know why that's happening, and if I can't find an economic or fundamental reason why that's happening, knowing exactly where these levels of support are on the weekly and monthly and daily charts might be the catalyst that I wasn't looking at. Yeah, so really, you know, basically at the end of the day, we can, as an analogy, if you consider you're driving through the city, you might get lost within a few blocks, but if you have a roadmap of the larger city, then you'll have a much better chance of getting where you need to go. So the monthly, weekly, and daily charts are really that bigger picture roadmap that we have to be aware of. Okay, so we can pretty much just identify that right now we are still in an ascending trend, and that we're really looking for one spot 5, 2. And let me just zero in here. We're really looking for one spot 5220 to be breached, and even more so, confirmation would bring us under one spot 5200, which is the whole number, and that's when we can infer that the 1-year ascending trend here has been breached, and that we should at least begin to decline even more so, perhaps even down into the one spot 4800. What's important to note, though, is that we are resting on the weekly chart on the 20-period moving average here, and that you know, if we next week, if we take out this weekly low, then it's likely that we are going to move down and test ascending support. So it might not actually look like much on the chart, but when you consider that that's 200 pips, that's actually a huge move, and that's why we have to be so aware of exactly of where the longer-term charts are, because once we break that weekly low, which could happen easily next Sunday or Monday night, if we begin the week trading below that, there's probably a pretty significant chance with the current bullish news in the U.S. dollar that we are going to see another 200 pip drop next week. So again, you know, just by having an idea of what's happening within the weekly chart, we really have a greater chance of succeeding. Okay, then if we look at the daily chart here, we can see exactly what's happening in the current relevant trend. And I'm just going to pull up my trend tool here. And on a daily basis, really what's happening is we're in a period of consolidation. Oh, Bob, I'm glad you enjoy it. Okay, so you can see that we're actually in a period of consolidation right now. And I've heard a lot of people lately talk about us potentially being in a range-bound market for the summer. At the end of the day, I mean, if the entire world were only trading on technicals, yeah, that would probably happen. But the entire world isn't trading on technicals, and the fundamental and economic situation that is set to present itself over the summer really demands that we might actually break lower out of the range, or even higher depending on interest rate policy. And as of this morning, Fed Fund futures were fully pricing in a 25 basis point rate hike from the FOMC in September. That's pretty big news, and that's a pretty big paradigm shift from what we've seen over the last 4 or 5 months. So as we see the ECB start to come forward, and we could actually see a rate hike from the ECB in July if inflation continues to rear its head. However, I think the ECB is really starting to get some pressure from the IMF and also from the U.S. Treasury, the President, and from the FOMC as well to hold rates steady, at least for now, until September, so they have all second quarter data. I just want to point out really quick one other thing, is that there's a lot of talk lately that we could actually be on the eve of a war with Iran, which would drive oil prices higher. And there's just, there's one really key point here that needs to be made. It's an election year, and the last thing our administration is going to do before the election, if they hope to have any type of Republican have a reasonable chance in the November election, is go to war with Iran. So I think that we can pretty much rule out any type of an aggressive move against Iran unless Iran does something completely absurd. I think that we can pretty much rule out any type of an aggressive move by the United States into Iran before November 4th. And that's really important for us to know, just because obviously it has a lot to do with oil prices. Okay, so back on track here. As we look at the daily chart, we can see the current relevant range. We also know that through stochastics that momentum is starting to fade. What is really key here to note is that we have seen consolidation within the range here, and we are also trading underneath the 20-period moving average and underneath the 50-period moving average as well. This is actually a reasonably significant event in the sense that obviously we're holding ground at present for the day at with a higher low. So you can see low, higher low, higher low. This confirms the present consolidation. And then also we have the lower highs on the ascending resistance side. Basically what we can look for is next week, as you know from the weekly chart that I just showed you, if we start to break down beneath our weekly low, which would really infer, if we were looking for total confirmation, would look for a move that breaks below one spot 5350, bringing us below this low and this low. We could infer that the consolidation range has been breached, and we're likely going to move lower, and that's where we would see a potential decline all the way down into the 200-period moving average. However, next week, with the weekly chart, as we've already covered, if we do start to kind of rally back out, we can infer that the higher low keeps the consolidation range intact, and that we might begin to ascend back out, in which case we would know to look for a short entry up on descending resistance, assuming there's no other type of new news or economic news, geopolitical news that surfaces that would actually drive us to highs. Okay, so now we're going to, are there any questions so far? I just want to make sure everything is here. And Nev, I'm not sure if I understand your question, what percentage trade on fundamentals. The real key here is that we need to have a emergence of fundamentals and technicals. We have to be able to feather the two together, and to trade on one without the other would be like driving with only one headlight, pretty much. If we have two headlights and we're in the thick of the woods, we definitely have a much better chance of seeing where we're going. And once we actually see the two kind of merge together and feather together, and we actually see how the fundamentals begin to unfold on the technicals, it really brings our trading to a new level, and we really see an entirely new paradigm of Forex trading. And really through these Thursday seminars, what I hope to show over the next couple of months is as we start to travel forward, and I'm going to use the euro US dollar as my main subject over the next couple of months, but we will discuss other currencies. But as we move forward, you're going to start to see these fundamental events unfold on the chart. And as I hope to show you, I think within a couple of weeks, you're going to be able to begin predicting the technical events before they happen, because you'll be able to perceive the fundamental events before they happen as well. And you're going to see everything feather together. And the only way I can really describe it is, if anybody here has seen The Matrix, the movie, the first one, I think in the very end, when all of a sudden he starts seeing the code behind everything, and everything is code. When all of this comes together and we start to understand how the fundamentals overlay with technicals, you're going to see that code, because it's here, and the code is in the chart. Okay. So we know right now that we're sort of at a critical level on the euro-US dollar, in the sense that if we have a breakdown, further breakdown tomorrow or on Sunday, we're going to breach the weekly low and also decline in the relevant range of the trend for the past year. And not only that, we would break below ascending support of the daily chart. If we start to turn around and rally back out here, we know that we're going to hold that weekly low, and then we're going to look for a short entry right up here. But at the end of the day, we can use this consolidation range low as a stop for our long positions. Okay, so now we're going to drill down into the 4-hour. Okay. Now we are at the 4-hour chart, and we can see exactly what's happening here. Boy, this was a fun run, wasn't it? Okay, so we can see that we're sitting right on ascending support here. I'm sorry, lateral support. And let me just draw a line for you here. And I'm going to kind of just clip out a few of these lows here, just so we have a clear picture. But we would know that you know, our true low here for the overall trend to be breached and to take out ascending support of the consolidation that I just pointed out on the daily chart would be in the 1.5366 area. Looking at the picture within the daily chart, we know that we do have descending resistance dropping down for the 2-day relevant range. And we also have significant resistance overhead of the 20-period moving average. We have the 50-period moving average, and we also have the 200-period moving average, which amazingly is exactly where we failed last night and where this most recent decline is. And so what I really just want to point out here on the 4-hour chart is, yes, we know that we're sitting on support of the weekly chart. Yes, we know we're sitting on support of the daily chart of ascending support of the current consolidation trend, and that we also just failed at these significant levels of resistance overhead, where the ascending trend is or descending trend is now showing significant resistance. So there's two things presenting itself right here. Traders are probably wondering, okay, now what do I do next? I'm just using trend analysis. What do I do next? And where do I go from here? What type of position should I take at this point? Well, we can do one of two things. We can consider a long position, assuming that that we are going to hold support of the weekly, daily, and 4-hour trend. Or we can just kind of sit on our hands and wait until we rally back out for a short entry point to potentially trade with the near-term trend. Personally, I do both. I don't know if I recommend that for everybody, but as we kind of drill down in, I'll show you how we can actually identify where both of these trades are and then where clear stop loss points are. I just want to check and make sure I'm doing okay on time. I think we have until the top of the hour. Is that correct, Maud? Okay. Now we're in the 2-hour chart, and you can see the most brilliant thing about the macro to micro analysis is that we find so much clarity as we start to drill down into the intraday charts, because we know what the bigger picture is and we know where these key critical levels are. And we really have we have an edge over a lot of other traders in the Forex world, because we truly understand what's happening, and really this is this is the fundamental way that a lot of bigger banks and hedge funds look at their key levels of target entries and exits. And you know, a lot of the bigger banks and hedge funds, I mean, they do rely on fundamentals and economics. However, you know, they have to be able to time their entries right as well, and they do so looking at the macro picture, not the micro picture, because they're obviously not in it for just a couple bucks. So by understanding the macro picture, we also kind of have a greater understanding of what's happening within the bigger money of the Forex world. Excuse me. Okay, so now we're going to draw a couple more lines on the 2-hour chart. We know that we failed right up here at the 50 period and the 200 period, and then also at the top Bollinger Band. Amazingly, the 50 period and the 200 period on the 4-hour chart were a little bit further spread apart, but on the 2-hour chart we can see how they came together exactly at the Bollinger Band. This was a very, very clear and distinct signal that we should actually go short here. And you know, I have to tell you the truth. I actually missed the signal last night because I was looking at shorter term time frame charts. So at moments like this, it reminds me myself that obviously that walking through all these charts, even though it might take me an extra 10 minutes every night, that I will always find the best trading opportunities by doing so. So I'm a little disappointed with myself anyway. But you can't find every great trade opportunity all the time, right? So as we see, we're basing out here down in the on the bottom line of the Bollinger Band here, and we've actually pierced it once, twice, and we've come off on a simple reversal level. For those who are seeking a short-term reversal trade, now we can infer that if that was going to happen, the trend would probably likely stall out at descending resistance of the 2-hour chart. If we were going to implement that position right here, we would have to understand that it would be incredibly risky because we're trading against the larger paradigm of the present trend and the fundamentals of a more bullish U.S. dollar. So in doing so, if we were going to even implement a position right here at 1.5411, we would probably want to start to consider our first and our initial stop loss point on the 2-hour chart just below the low of the 2-hour bar. Because if we are truly going to see a reversal, then it's going to happen right away, and we're not going to see really too much wiggle room, especially because for the first time, in the first 4 hours, we've actually come off the lower Bollinger Band. It's important to note that if we, and here's one thing that I really want to, let me see if I can make those more visible. Oops. And we almost lost our chart there. Oh, can everybody see the chart all right? Okay, and just bear with me for one moment. I just have to switch into the other side of the application to get the actual, to change the colors on the Bollinger Band so you can see them. It'll take just one moment. You got it. And while I'm doing this, are there any questions or anything anybody wants to share? Any good jokes? Harley, I trade 24/7. I probably sleep 2 hours a day, and as the Forex Force subscribers know, I'm pretty much always here. I think we actually might have 1 or 2 Forex Force subscribers in the room here. John, are you here? I think John from London. When I talked to you last night, I think you mentioned that you were gonna. Okay, we're almost there. Okay, oops, let me just switch this out. Guys, we're almost there. We're almost to those shorter term time frames. Yeah, Trader One. Actually, I just want to point out that through, if we really understand the larger economic situation, we can really actually we can sort of perceive what Bernanke is going to say anyway, and and really we know the larger paradigm of what's happening within Bernanke's overall rhetoric, and that is that obviously. Oh, great. Okay, you guys can see the chart okay? Everybody sees the chart? Okay, great. And you can see what, well, okay, yeah, you can see what I've done is just changed all three of the Bollinger Bands to blue, and then the EMAs are black. So, okay, great. Okay, you can see that if we were going to trade a reversal position right here, what we would do is we would definitely look for a breach of the low on the 2-hour chart as our stop. And the great part about this is usually if you're going to trade a longer term time frame, like a 2-hour or a 4-hour chart, there can be a considerable chance of your stop being a great distance away from your entry. However, as the chart is showing right now, we're currently sitting at 1.5409, and the low of the 4-hour bar, as denoted, you can see on the lower left-hand corner of my screen, is 1.5400, so the whole number. So we could actually just put our stop about 3 or 4 pips below that. And I also want to point out really quick that if you find a stop on a chart on a specific trend line, you absolutely have to put your stop a few pips on the other side of that. And the reason why is because the chart is actually only the average print for the particular time period. Brokers actually don't have to print the highs and lows. So if I put my stop at 1.5400 and the euro US dollar fell to 1.5402, I would still get hit because most brokers' bids would be 2 pips below the actual chart print at 1.5400. Is verbal intervention from the Fed a major event drive? Yeah, actually, basically, at the end of the day, what we really have going on right now is sort of a I like to call the ECB FOMC cage match on who can drive their currency higher through inflation rate rhetoric. And so at the end of the day, what's really happening is both central banks are discussing inflation and sort of threatening interest rate hikes to hopefully see their currency appreciate. And at present, the FOMC is really winning in the sense that our overall economy is much more healthy than the Eurozone. So really, at the end of the day, regardless of what Jean-Claude Trichet or Weber or any of the other ECB guys, all you have to do is look at the numbers. And the fact is that overall GDP growth in the Eurozone is falling, while the U.S. is actually starting to see hints of recovery. So, yeah, actually, VBYS. You know what I'll do is I still have an article actually coming to everybody from last week on the correlation between the U.S. dollar and higher oil prices, and I'll actually try and get that to FX Street, Maurice, either this evening, and then I'll follow it with an article on the prints as well. So, okay, yep, and I'll go over that for you, the 1 minute chart. And okay, so now we're looking at the hourly chart, and I just want to move quickly through this because we only have 13 minutes left. We know exactly where the descending resistance trend line is. If we look at the hourly chart, we see that we've actually rallied back off of the lower Bollinger Band, and we know that we also have significant resistance overhead, the 200 period moving average, the 50 period moving average, and the 20 period moving average. We can see that at the end of the day, even on the hourly chart, when we just drop in a short-term trend line, we know that we have significant resistance just on a short-term basis. right at these levels. So what we can kind of infer on a short-term basis is that if we were to begin to rally maybe above one spot 5450, then yes, we could see a little bit of a reversal, but we have more resistance at one spot 5469, and then we have more resistance at one spot 5495, and then of course we have significant resistance of the 200 period moving average at one spot 5461. So while that reversal trade might have looked good on the 4-hour chart and the 2-hour chart, when we start to look at it on the hourly chart and really drill down into what's happening, we know that actually some type of, because of the resistance overhead on an hourly basis, some type of fundamental event, like obviously Bernanke saying something slightly silly, would really have to take effect before we rallied back out. And if we were truly going to trade with the trends, we would probably really want to consider a short position in this area. Okay, and I'm going to have to move a little bit quicker because we only have 5 minutes left, and I apologize that it takes me so long to get to these shorter term charts. Okay, then if we look at this at the 30-minute chart, if we look at the 30-minute chart, we can see that we're starting to see a period of consolidation within the present Bollinger Band. And we also know exactly where that descending resistance line is, and we also know where our greater support is here. So as these Bollinger Bands start to consolidate, we know what this really infers is that we're on the eve of a larger breakout move. The question is that breakout move going to be higher or is it going to be lower? Well, the overall larger paradigm within the U.S. dollar is for a stronger U.S. dollar. So we know that if we were going to see a breakout higher, it would have to be from a fundamental event, Bernanke speaking, something else that surfaces, or some other type of fundamental geopolitical transition. So really what we would want to do then is probably not take a trade here at all. And before we were thinking about that reversal trade, but there's too much risk for it. And we also know that that there's tons of descending resistance up here. Well, while we're in this channel here, and as long as we haven't broken support, then you know the best thing to do, and the best traders in the world actually know when not to trade versus when to trade. So probably the thing that we would want to do, instead of actually trying to trade this little reversal here, is we would just sit on our hands. And even if the Euro-US dollar started to rally back out, we would still just kind of sit on our hands until we had an opportune short entry point to trade with the trend, and assuming that obviously that we are going to see this larger bullish U.S. momentum continue. But you know, the chances on an overall larger reversal here are probably pretty insignificant. And I just want to point out really quick here too, if we were going to take the just our Fibonacci points, you can see that we actually see the Fibonacci, the 50% retracement, sort of hit right at right above the 50 period moving average, which so likely if we were going to get this little breakout right here, then it would be the perfect scenario for a head fake. And how many people here get trapped in head fakes all the time? This would be the perfect scenario for a head fake, just to pop just barely above the 50 period moving average, just above the 50% retracement, and then fail from there. Okay, now if we go down to the 15-minute chart, we can see even more detail of exactly where we stand right now. And the great thing is that actually, as we start to drill down into these shorter term time frames, this is where we begin to see how and where we find our trades, and where we can find our greater stop loss points. So if we were going to be so bold as to try and trade the reversal, then what we would want to do is look at the 15-minute chart and the 10-minute chart and the 5-minute chart for our specific stop loss points. We know that if we were long and we start to break below the 15-minute candle here at 1 spot 5403, and then if we actually breach the 1 spot 5400 level, not only are we through a whole number support, but we're also below that 15-minute candle, and so we would want to close our trade immediately. Also on the 15-minute chart, if we started to break above 1 spot 5417, we could infer that we're probably going to have a reversal up to the higher end of that range, and of course, you know, we're going to start to see significant resistance up in the 1 spot 5440 and 1 spot 5450 area, which we just saw on the hourly chart or 30-minute chart. Okay, So now as we drill down into the 10-minute chart, we can see the same ascending support lines holding right here. We can see the current short-term range, and we can also see that we're in this period of consolidation even within the 10 and 15-minute Bollinger Bands. To drill down into the 5-minute chart, now we can see exactly where that range is, and it comes through as clear as day. Now, if you were a scalper, we can pretty much infer that this range is going to stay intact, at least probably for the next hour or two. So scalpers probably could trade this range right here. And I actually just did a short webinar with FX3 on channel trading, which is a whole other subject, especially when we come down to something as risky as scalping, just because there's the overall breakout risk looming overhead. But we can see right here as we're trading on the lower end of the range on the 5-minute chart, we do actually have the momentum indicators alluding to a potential bounce to the higher end. Okay. And as I said before, you know, if you wanted to, reversal traders probably could look for a short pop right here. The thing to remember, though, is we know that the bigger picture is showing us that we're sort of in this era of a potential decline, and then when it comes, it's going to come quick and hard, as noted in the bar here and then the 3 bars here. And you guys, I have to wrap it up. I apologize. But I just want to say really quick that again, you know, instead of trading the reversal, you might leave a few dollars on the table because you don't take this opportunity, but you'll always have the short opportunity up here to trade with the trend. At any rate, I would really like to thank everybody here today, and thank you so much for your time. And I just want to point out really quick that one of the most incredible aspects of trading Forex is not so much knowing how to pick entries, but exits. And so one aspect that we really haven't covered today are stops, and I'll do that again in the future. But stops are vitally important, especially if you're trading reversals. So no matter what happens, I would like to ask that everybody please be very, very mindful of your stops. And also please be mindful of the macro trading picture, because without doing such, we really stand the chance of sort of hurting ourselves and hurting our ability to really trade profitably in the future of Forex that we hope to have. And finally, we are at Trading Markets. We are hosting a webinar coming up next. I guess Sunday, Monday, and Tuesday, the 15th, the 16th, and the 17th. I'll be actually teaching that webinar for 3 days. And what I'm going to do is teach all of the concepts of technicals and fundamentals on the first day, and on the second day, we're actually going to cover. I'm actually going to trade live for 2 days straight while I teach these concepts, and that can be found right here at this link. And I think that link just showed up. There we go, and that's where it can be found at. But anyway, regardless, I look forward to spending time with you again next Thursday. And these webinars with FX3, you guys are really great. I really enjoy all of the feedback and all of the questions, and I really enjoyed this time with you. So I look forward to seeing you again next Thursday. And thank you so much.